Welcome to another S&P 500 analysis. As you can see, the S&P 500 made another all-time high last week and closed on Thursday with a new all-time closing high. Now, for the week, we saw the Russell 2000 actually was the best performer with a gain of 1.13%, and the worst performer was the Dow Jones Transportation. It lost 3.62%. And for the month to date, we see the Russell 2000 actually the top performer so far for the month of February with a gain of 4.39%. And year to date, still down there near the bottom with only a 0.28% of a gain. Now, the S&P 500 is hit by 3.3% for month to date and almost 5% for year to date. The NASDAQ 100 is ahead of them by 3.2% for month to date and a little bit over 5% year to date. And the Dow Jones Transportation is only ahead 0.73% for the month, and it's negative for the year to date at minus 1.7%. And look at the sentiment here. We see the VIX is still under the 20 level and been hovering between that 13 and 15 area. Right now, it's sitting at 14.24. So is the put call ratio has been under the 0.75 and is sitting at 0.69. So the market participant was still quite complacent and also risk on. And looking at the up-down volume ratio here, we see that on Tuesday with the CPI report, really under a lot of selling pressure, it was over minus 13 to 1 in favor of the down volume. But then Wednesday and Thursday sort of recovered. It got a nice buying pressure pushing it back up. Now on Friday, we did see a little bit of a selling. Similarly for the daily advanced decline on Tuesday, the CPI report day, it was a bond market selling. But on Wednesday and Thursday, we also saw bond market participation pushing it back on the upside. Then on Friday, we did see more declining stock than advancing stock, almost 900 more declining stock than advancing stock. And for the NYSE new high, new low, we are still looking at more new high than new low. So that's a positive. There were 180 more new 52-week high than 52-week low. And looking at the New York Stock Exchange cumulative AD line, you notice that it also came back up along with the S&P 500, with the S&P 500 closing with a new all-time closing high last week. And look at the NASDAQ 100. Now, the NASDAQ 100 did not make or did not close with a new closing high last week. It did make a new all-time high on an intraday basis. And also the up-down volume ratio was quite negative as well on Tuesday with the CPI report coming out that caused the market to react negatively. But on Wednesday and Thursday, it bounced back up pretty well. A lot of buying pressure here. Similarly, for the daily advanced decline on Tuesday, it was a bond market decline. But on Wednesday and Thursday, we saw bond market participation on the upside. And on Friday, we did see almost 1,000 more declining issue than advancing issue. And in the NASDAQ new high, new low, we are still seeing more new 52-week high than 52-week low, which is a positive. On Friday, we saw 164 more new 52-week high than 52-week low. Now, for the NASDAQ, we are looking at a little bit of a short-term positive divergence here between the cumulative AD line and the NASDAQ 100. Notice the NASDAQ 100 has been putting a lower closing high, but the advanced decline is actually putting in a higher high. And looking at the 11th sector in the S&P 500, we see the technology on a trend basis is still outperform relative to the S&P 500. And the healthcare is kind of flattened out. So maybe it's starting to turn up and show some outperformance. But right now, it's still kind of flat. And the consumer discretionary is still underperformed. The financial is a little bit of outperforming the S&P 500 recently. So we could see a little bit more of a strength in the financial area, and also communication is still outperformed. Now the industrial is kind of flattened out as well. So maybe we get a little resurgence on the industrial in the coming weeks. And here in the consumer staple, we're seeing that it is still underperformed. So it's the energies and also the commercial real estate is underperformed. The material is also underperformed, likewise for utilities. And for the other sector, looking at semiconductor, it still outperformed. And the oil seems to be flattened out. So we might see it starting to turn up. So we'll see. We'll keep an eye on the crude oil. And the exploration is also kind of flattened out here as well. So we did see a little bit of outperformance here last week, likewise with the oil. And look at the retailer. The retailer is also showing a little bit of outperformance in the last couple of weeks. And also looking at the biotech is still underperformed and the minor is underperformed. And looking at the bank and also the regional bank, it seems to be kind of flattened out. So we'll see if there's some trouble with the banking sector in the coming weeks. So, but right now it seems to be holding up and pretty much performing relative to the S&P 500. And for the home builder still outperforms, and the long-term bond is still underperformed. And here, looking at this 10-year versus 2, the yield curve, it is still negative at minus 0.36, so it is still inverted. And here, looking at the 10 versus the 3-month, it is also still inverted at minus 1.1. And the 10-year yield index is back up at this 4.33 last week. On Friday, it actually came up, almost touched it, and back off a little bit and close at 4.294. So I wouldn't be surprised in the coming week we could see this move above this 4.33 here. And I'm still looking at this thing to come up and at least, maybe come up to this 4.7. I tell you, I wouldn't be surprised to look at this, 5% again. But anything is possible, right? And here's the US dollar. The US dollar moved back above this 103.82. And right now it's above that. So I'm still looking for the dollar to come back up to this 105.8. And here's the dollar future. Here it came back up and it's sitting above the composite point of control at 104. So I'm looking for this thing to come up to this 105.85. And here's crude oil. Remember, we're looking at crude oil. If it could get up to this 76.68, basically this 77 area, right now it's sitting at 78.14. So I'm looking for oil to continue to push up and see what it get back up above this 85 level. And here's silver. Silver got a nice bounce last week off of this 2240 area. So we'll see would it be able to get up to this 24, this composite point of control. And gold is still trying to break out of this consolidation area here, been hovering between this 2000 and 2090 level. So we'll see, will this thing finally get a little bit of a push and get back up above this 2090 and possibly move up away from this consolidation area. And look at some of the cash index, looking at the NASDAQ 100, we're still basically looking for this symmetry move, and that will bring it up to 18,300 area. And the Russell 2000, it got back above the 2000 level and sitting above this 2032, and it broke away from this consolidation area. So we'll see, would it be able to come up to this 80% major move or this 100% major move? This is basically the extension of this range here. And the Dow Jones Transportation is making higher low and also a couple of higher highs. So we'll see what the Dow Jones Transportation make its way back up to the 16,730. And here's the Dow Jones Industrial. It did put in a new all-time high last week, closed with a new all-time high on Monday. But we're still waiting to see would it be able to get above this 39,000 level. And here's the S&P 500. You see that the S&P 500 came down, test the trend line here on the CPI day, and actually closed right at the lower end of this lower range of the expected move. And for this week, the market is putting in a upper range between 5,075 and 5,065, and the lower range between 4,946 and 4,925. Now let's take a look at the indexes, ETFs. Starting with the diamond here, we see that the upper range for this week is 391.40 and 390.50. And the lower range is 381.90 and 380.30 here. Now notice I got a composite volume profile here. Right now we're basically looking at to see will it be able to hold this level here at 385.54. So I'm looking to see if it could hold and look for it to come back up to this high volume node and see what it get above this high volume node and pushes up to this 388.33 here and possibly come up to an all-time high. Now, if it push through and make a new all-time high, then the upper range will be in play. Now, if it is unable to stay above this 385.54, then we are looking for a price to push down to this high volume node here near the 384.51, 384.61, this level here. So we're looking for it to push down here and see would it be able to hold this level here and then come back up to the 385.54 and possibly make another push up. Now, if it doesn't happen to be able to bounce back up, instead it come down to this lower range here, then we basically are looking at the possibility of coming down to this high volume node, and that would test the low from the CPI last Tuesday. That's the day the CPI came out and we have that sell off. Okay, so that's basically what I'm looking at for the diamond. And now for the SPY, we are looking at the range here for next week is somewhere between 506.30 and 505.60, and the low range is between 493.40 and 491. So here's a high volume node here near the 497.99, essentially 498. So we're looking to see what it be able to hold above this high volume node and pushes back up. And if we could push through this 502.30 and into a new all-time high, then come back and backtest the old previous all-time high, then we could push to see would it be able to push up to this 505 area for the SPY here at the upper range. Now, if it is unable to stay above this high volume node here, then we are looking for a downward move to see would it be able to hold this trend line. And if it doesn't, we're looking for this thing to come down to this 494.40 here and possibly get a little bit of a bounce and basically backtest the trend line and then pushes in to the lower range of the expected move and then come down to this 491 area. And that basically also come down and check the low on that CPI Tuesday, last week's, on Tuesday where we got the CPI report. If you'd like to see additional content from me, be sure to go visit my newsletter, The Pulse of the Market, at Substack. And the link is smtraderca.substack.com. Looking at the QQQ here, the upper range for the week is between 440 and 439.90. And the low range is between 422.20 and 419. Now, what we're going to be watching for the Q is to see would it be able to hold above this HVN here at 428.51 and then pushes back up to this 432 and possibly come up to this 435.86 and push through this HVN and into all-time high, and that would put this upper range in play. Now, if it is unable to hold this level here, this 428.50, then we are looking for a chop here in this high volume area and then pushes down into the lower range of the expected move and then come down to this 419. And that would put this area in play here, somewhere around 417. And for the IWM, we're basically looking to see would it be able to hold this 199.67. Now, the upper range for the coming week is between 207.80 and 206.60. And the lower range is between 196.70 and 195.50. Again, we basically are looking to see would it be able to hold this 199.67 and then pushes back up to this 205.20 here. If it is unable to hold this area here, this level 199.67, then we are looking for a push down into the lower range of the expected move, and that would put this 196 and 195 in play. Then look for a potential move toward this 190 area. So extension, you're looking for a retracement back down to this balance area. If you find the content in this video to be useful and informative, be sure to smash the thumbs up to give it a like to help promote this video on YouTube. And if you're new to this channel, click on the subscribe to subscribe to this channel so you won't miss any of my future video. Thank you for watching and good luck on your trading.